Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 29th of January 2020. So, yep, welcome everyone. Welcome to this Wednesday's excuse me guys. Excuse me for my voice. So welcome to this Wednesday's morning session where we're gonna have a quick look at the markets, view the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which you can find here. If you click on, if you go on jfdbank.com and click on the research tab right here, it will take you to our page, which we update on a daily basis. So yep guys, I believe you can find a lot of useful stuff here for yourselves, so feel free to visit us on jfdbank.com and click on the research page. Right, now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE100. Now previously I talked about this one, and what I was saying, that if we get a nice drop below this level right here, the 7,525, then yes, there is a good possibility we could see this one drifting further down. The move that we had here, a little bit of a not an ideal one, I would say, because we did get a drop below the 7,525 level initially, but as you can see, it quickly kind of jumped, skyrocketed back up, but then quickly sold off again. So basically, whoever was short here, if you didn't have your stop loss in place, then yes, this is where it could be. This is the annoying bit sometimes. Well, I mean, we do get something like that in the markets, so we need to prepare ourselves for that, and that's why we have our stop losses in place. So you can see that yes, like I said, it drifted lower. It did show its intention to move further down. Our target was the 7,446 initially. It was reached, but after this kind of spike higher initially, and then a straight sell-off to the downside after that. So that's why, guys, for now, of course, let's first of all get rid of all of these lines, and let's look at this from a new perspective. So overall, of course, yes, we are still balancing above this medium-term upside support line taken from the low of the 3rd of October, but for now you can see that basically it's a bit of a tricky one, because on one hand it drifted lower, even dropped below its 200 EMA on the 4-hour chart, but now it's kind of pushing back to the upside. So the only thing how we could try to protect ourselves here, and just maybe try to see if this is going to work out or not, and that's if we are going to draw a nice short-term tentative downside line here. So in a way, all this room here could still be seen as a temporary correction before another leg of selling. So like I said, as long as it remains below this little short-term downside line, from the near-term perspective, yes, we will aim for the downside. Excuse me, guys. But again, if the for those who are more on the cautious side, what you could do is just wait for a drop below this low, this recent low near the 7,393 territory, roughly around here. A drop below this would confirm a forthcoming lower low, and then yes, we could aim for this medium-term upside support line. Now, in terms of the upside, now again, we'll take also a very conservative and careful approach, and probably wait until we get not only a break of this little short-term tentative downside line, but also a push above the 7,642 mark, which is the high of the 24th of January. So that's why, guys, for now, be very careful, because still, if we look at the daily chart, let me just, there we go. you can see that if we get a nice push above this barrier, this 7,642 zone I talked about, then yes, we will aim for the highest point of January, which is roughly around the 7,682, and then above that we do have some better higher levels here that we could meet. But for now, let's keep it short and simple. First, let's see how this is going to play out near this downside line. If the pair decides to travel higher, we will consider this move higher here if we get a push above the low of the 23rd of January here near the 7,503 territory. If we get a push above this, then yes, there could be signs of willingness to drift towards this downside line. But if, let's say, if it struggles to push above the 7,503 territory, then well, we could see a nice reversal earlier to the downside. But again, for those, like I said, who are more on the cautious side, wait for a drop below the 7,392 level. Now then, silver. So we did get a bit of a rebound in the equity markets overnight, and yesterday as well, of course. So looking at the silver here, you can see the effect that it had on silver. So basically, and the rebound in the equity markets kind of pushed commodity prices a little bit lower. We saw silver not only drifting back below this 18.15 level that I talked about, and I talked about this one on Monday, if I'm not mistaken. Let me just quickly double check myself, guys. That was on that was last week actually, and nope, do apologize. And traders tea time on Monday. So basically, we were still kind of balancing above this barrier here, the 18.15. But what I was saying, that if it drops back below the 18.15 level, then well, all this territory would be somewhat of a neutral one for us. But given the fact that it actually slid sharply below this 17.65 zone, now this is where it raises concerns for the bulls, and in a way, this now opens the path towards even lower levels like the 17.30 zone. That's where we're targeting right now. We want to see how it's going to perform, because that's the high of the 4th of December, and then if it holds, we may see a nice rebound, maybe a push back to the upside. But given that we're having the rebound already before actually reaching this area, the 17.30, so we can consider something like this as an option, where maybe a bit of a larger correction, we could see maybe a larger correction here towards this 17.65 zone, and if it struggles to push above it, then well, another round of selling could be possible. So also what you could do here is, and let me just quickly put this one on the chart. Where is this this thing that I need? There we go, Fibonacci retracement. So the way you could have a look at this is basically like this. So you can see that the area near the 23.6% retracement on the Fibonacci is roughly around the 17.58, 59 zone. So basically keep your eyes on that one as well. In case this doesn't hold, then yes, we could see a test of the 17.65 area. But if that holds, then yes, another round of selling could be possible. So for now, guys, we are leaning more towards the downside, although we're keeping an eye on this potential little correction first, and let's see how this is going to play out. If it travels back above the 17.65 area, well, I mean, all this zone will be somewhat of a neutral one for us. For now, because we want to see how it performs around here, and to be honest, maybe we will even wait for a push back above the 18.15 level in order to consider the upside. So jumping into Brent Oil, I talked about this one yesterday, and basically what I was talking about was that we may see a nice correction here, and this is what we are getting right now. So after it found support near the 58.50 territory, the commodity retraced back to the upside a little bit here, and is currently finding resistance near the 60.32 zone, which is we can see that how well it acted as a nice area of support support here back in on the 20th of November, on the 1st of December, and also the 3rd of December. So currently it's getting a hold up near this area. If it continues to hold, then we may see another drift like that to the downside, potentially maybe even aiming for the lowest point of October near the 56.17. But again, for now it's a little bit too early to talk about that. And for those who are more on the cautious side, what you could do here is just wait for a drop below the 58.50 territory and then aim for the downside, because this would confirm a forthcoming lower low. And yep, it could in a way open the path towards the lowest point of October. So in other words, as long as it remains below this downside resistance line taken from the high of the 7th of January, we will stay bearish for now. So keep your eyes on this one, guys. In terms of the upside, well, I mean, a push above the 63 mark, that's what we're looking here for now. We'll see. It depends, because if it breaks this downside line, we want to see how this whole price activity will go around here. But for now, at this point in time, the 63 level, that's what we're keeping an eye on in order to consider the upside again. AUDUSD. So I talked about this one recently as well, and basically what I was saying, that we may see a bit of retracement here. Now initially the idea was, if we see a hold up near the 0.6750, then we may see a nice correction back to the upside. It did overshoot it a little bit and kind of violated all this territory. So in a way, what we could do here is just mark the yesterday's low, which is near the 0.6733, and you can see that now we're having this nice retracement back to the upside. Again, we're classing this as a temporary correction only because we're still trading below this downside resistance line taken from the high of the 1st of January. So in a way, as long as it remains below this downside line, we will continue aiming lower. So that's why, guys, for now be very careful. Now with the upside, it's also a little bit tricky because all this territory here is somewhat of a neutral one, but if it pushes suddenly back above this upside line, this medium-term upside line, and pushes above the 0.6857 zone, then yes, we will start considering higher areas. So that's why, guys, for now be very careful on this one. Any move, any kind of pullback to the upside here could be still seen as a temporary correction before another leg of selling. GBPJPY, I talked about this one yesterday, and what I was saying here, guys, that basically, given the fact that we've managed to break this this upside support line, this medium-term upside support line taken from the low of the 3rd of September, we needed a nice drop below this area of support near the roughly around the 140.80 and the 141.14 levels. Both kind of acted as very good areas of support previously. So in a way, we could just look at the 140.80, because if we get a drop below this, this in a way could lead towards further declines, and because this would confirm a forthcoming lower low, and yep, more sellers could be joining in. So for now, the same game plan remains. We need to see a drop below this territory first before considering the downside. Even with the upside, it's also a bit tricky because you can see it's still balancing below this medium-term upside line, so we need to see a push back above the 143.18 level in order to consider some higher levels, because more bulls could start joining in here, because the pair would be back above all of its EMAs here on the 4-hour chart, and that could be seen as a nice positive thing. So for now, in terms of the downside, there is a good chance we may see drift lower, but again, we cannot really talk about the downside yet until we get a drop below the 140.80 zone. So keep your eyes on that one, guys. And the last pair for this session is going to be the euro dollar. Now, very quickly on this, so this is what I talked about yesterday in my trader's tea time. So what I was saying, that we will be aiming for the psychological 110 territory, which if holds could provide some support and could send the rate back to the upside here a little bit. The only thing is that the upside might get limited near this very short-term downside resistance line taken from the high of the 16th of January. It is a little bit tentative. We only have 2 touches here, but nevertheless we'll keep an eye on it for now. So we're still keeping this idea in our heads, unless it starts really dropping strongly below the 1.10 zone. But again, slightly below that, around 1.0980, we do have another very good support area, which is marked by the lowest point of November. So for now, guys, keep your eyes on this one. It's very interesting, and let's see if the 1.10 can continue to hold. If it can, then we may see a bit of a retracement here back towards this downside line, but if it cannot, then, well, I mean, keep your eyes on the 1.0980, and of course, don't get me wrong, we do have some lower levels here underneath, but we'll be very careful here, and we want to see if we actually can get some strong support somewhere around here, either near this 1.10 zone, or if it can continue to keep the rates up, or is it the 1.0980 levels. But again, in other words, still all around this territory, we'll be very cautious with the downside. So keep your eyes on this one. So it should be quite interesting, and yep, let's see how this is going to play out. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, that's 14:15 GMT. For now, thank you very much, and have a wonderful trading day. Bye-bye.